Welcome back, ladies and gentlemen. The price of Bitcoin is back up at 35,000 US dollars, and I did buy the bottom. So just like in yesterday's episode, right, because I do stick to my narrative, right, Bitcoin is still bullish and we are going to be playing along as far as we are in this particular range. So what happened yesterday is we did test the liquidity at the bottom, and this is a very good thing because by the end of it all, right, we need this corrective structure pattern to be done with, and we need to continue forming higher highs, and the bull market is going to continue. So yes, to all the people who are still doubting, we are still in a bull market. This whole situation that we've been having, it is a normal correction. If you guys know anything about Elon waves, right, obviously you know that these corrective patterns do play and do have several structures as well. So just because it's happening on a daily time frame, right, it could take like a little bit longer. You know, we could spend the next 2 weeks or even a month correcting, but we are still intact if you look at the grand scheme of things. If you look at where we're coming from, I mean, we're coming from this particular bottom, so it's just having a little bit of a blip, you know, as far as this time frame is concerned, right? It's absolutely nothing. We haven't even corrected halfway through, you know, so we are still very, very intact as far as the bull market is concerned. So, you know, since I got to sell at the top, right, I'm just chilling. I'm just enjoying and not panicking. I'm sure to the people who kind of didn't take advantage of closing and taking profits here, you are the ones who are probably, you know, panicking, and you guys are sort of in tight corners at this particular moment. So anyhow, now let's talk about this particular structure, because just like we have established for the past few days, right, we are in a Wyckoff accumulation sort of phase, and as you can see from here, right, it does take a while in order for it to like play out and come to its conclusion. So basically the type of entries that you are looking for as far as a Wyckoff accumulation is concerned is the spring and the retest of the resistance line right over here, the last point of supply, the LPS or the spring. You see, I'm a very aggressive trader, and I have been playing all these moves. You know, as far as Bitcoin is concerned, right, you guys have been part of my YouTube channel. I've been coming at you on a daily basis, and we have been playing these particular fluctuations. And this is how we get to multiply our money and take care of the fluctuation. Okay, so getting back to Wyckoff, right? Our main strategy in order for us to like maximize our gains is we need to enter at the spring or the retest of the, you know, support line, or if we want to be very, very sure, the last point of supply is a better entry as well. But for me personally, I'm looking forward to entering on a spring. So the spring is definitely going to come. Okay, so in order for us to like recognize the spring, right, we need to test this liquidity right over here. So this is why I'm going to be even sort of changing the color of this particular liquidity level. So let me just briefly change the color so that you can see the difference. So what if I do that? Okay, let me use yellow. Okay, sorry, so green, and then the fill color should be a little bit bright like that, so that you guys understand exactly what I'm talking about. So yesterday we did sort of get back to test this liquidity. We have sort of formed a double bottom. So this is only a liquidity play, okay? And if you look at yesterday's daily close, right, let's look at this. Let's decipher this. We did end up dropping, but the bulls did step in, and this is why we closed above that particular threshold. If we were bearish, we would have closed close to this particular level. But look at the daily close on this particular candle. This is absolutely a dragonfly doji. You know, it sort of shows that the bulls are in control. And if you talk about market makers, right, market makers usually enter on such positions. In order for the price to reverse and end up closing like this, right, it means somebody with heavy pockets was buying. And this is one of the reasons why today is a bullish engulfing sort of candle. And what's going to happen is the next few days, right, we're going to go back into this particular range and sort of form bullish candles like that, because everybody's going to be jumping back into the market saying, okay, we did form a double bottom and we're going to continue being bullish, because everybody sort of everybody follows the crowd. You know, so if you did watch yesterday's episode, I told you I'm going to be building my positions. I told you I'm going to be buying the dip, and getting to buy the dip, right, it gave me very good entries. My average entry, you know, is significantly lower. So even if I use a stop loss, right, I'm still well off, you know. And yes, I do agree. I should have been much more patient, and I should have sort of waited so that I could have overall entered at a very good position. But when it comes to trading, right, there isn't anything as such as a perfect entry. You know, so this is why I always believe in dollar cost averaging. Like once you assess, you know, the play. And let's say, for example, you've got like 100, okay, let's say you've got $500, right? And then you are on this particular market. And then you also identify what type of structure that you are playing with and where the price might potentially go to. So in the previous videos, right, we were looking at this particular structure, you know, because we didn't really get to test this particular, you know, liquidity. So what you need to do is, when you are in the middle of the range, right, you simply start using the most risk-free amount or size from your total amount. For example, if you've got $500, right, you start buying BTC worth $10. You buy $10 here. When it drops, you add a $20. When it drops lower to your bottom range, right, that's when you can go aggressive. Maybe you start buying worth $100, and then by the time it comes to this particular level, and then you flip over to the smaller time frames, right, and you see that the bulls are beginning to defend, right, now you can go aggressive. Now you can de-risk and just pretty much go all in. You go with the whole amount, and this is basically how you get to like build a very good position. So ladies and gentlemen, you are watching a trader build his position, tell you his game plan, and execute. And yes, ladies and gentlemen, we are going to be back in this particular range. There's going to be a point where we are going to test this liquidity. Okay, this liquidity at the top hasn't been tested. We only made one attempt to test this liquidity, and we sort of sold off. And this time around, when we go back up to this particular area, trust me, we're going to go above this particular threshold, and we're going to touch close to about 40,500 to 42,000 US dollars. And if you did end up buying yesterday at 31,000, that's a very good trade. That's a very good trade. Okay. So if you talk about alternative cryptocurrencies, right, alternative cryptocurrencies have pretty much bounced more than 15%, like in the last 24 hours. Okay, so if we look at the best performers today, right, we've got AMP, Pirate, Solana. Algorand is up by about 17%. 17% by just counter trending the trend. DGB is up by about 9%. Theta Fuel is up by 12%. You get? So what I'm trying to say is, you need to have a game plan, and you need to build your positions. And whenever you are trading, right, your trades have to be uncomfortable. If your trades are comfortable, if you really believe that, okay, this particular trade is going to go my direction, you're probably going to lose your money. Okay, so this is one of the reasons why a lot of people lost a lot of money in Dogecoin, because everybody was like, Dogecoin is going to $1. It's a fact. You know, but the best trades are uncomfortable trades, and the best trades are built over a period of time, so long one understands the play, the game plan. Now let's get back to this liquidity that has been tested. Do you guys really think it's a coincidence that the price, like, literally, you know, halted and stopped dropping further in accordance to this particular wick right over here? Do you think it's a coincidence? there are market makers. The reason why market makers grab the liquidity right over here is in order for them to take out the people who are bag holding, or the people who've got like weak hands, so that next time when it drops, when they drop it, they're going to take down this particular level. Okay, that's how they play it, because now they are sort of in control of this particular threshold. Okay, that's how you're supposed to look at it from. So next time, trust me, next time when we come back from this particular high, right, next time we're going to drop below this particular level, and we're going to take down this liquidity. So in order for us to like get to our spring, right, in order for us to like drop below this particular level, right, the market makers need to be in control of this liquidity. Okay, and the spring is definitely going to come, and in order for the spring to come to fruition, right, we need to take down this liquidity at 30,000. We need to go below 30,000. So this is one of the reasons why I really believe that the spring phase is going to drop us to 27,000, and then from there we're going to continue with the bull market. So if you have that perspective, right, it's obviously easy for you to trade this particular range. This particular range is a blessing, because you can really get to like multiply your portfolio and just basically get to like double your money. But a lot of people are being mentally frustrated. You guys are kind of being lost in the sauce, because when it dumps, you think it's going to continue dumping to 17,000. When it pumps, you think it's going to continue pumping to 60,000. You know, so I really hope that you got a thing or two from this particular scenario, and you saw me build my position, and I built my position once I got to see the bulls coming through. And if we talk about the bulls, right, let's talk about this particular structure right over here. Boom. By the way, this is the now we're beginning the Elon wave, right? So if we look at the Elon wave, right, we are now beginning to sort of pump, and this is our wave 1, wave 2, and then we're going to have our wave 3 close to about, you know, 37,000, and then we might do something like that. Okay, so for now I'm only focused on wave 3. This particular chunk, this is what I'm interested in. I don't really care about wave 4 and wave 5 because it hasn't played out, and I do not have any data points to sort of start creating my play. So right now I have established that we have come from, you know, 0 to 1, and we've done our corrective structure on the impulse move, or rather the Elon wave towards the upside. So my focus is identifying the end of wave 3. That's all I need from now. Once I get to do that, right, once I identify the end of wave 3, right, now I can work and find the end of wave 4. So basically from here you can short, but I wouldn't advise shorting here, because, you know, the price could be like overly bullish and then you might just end up. So I would rather sell, get into USD Tether, and then re-buy back right over here. Okay, so once I get to identify the end of wave 3, I can then get to identify the end of wave 4 and the continuation of wave 5. That's basically how you play. You guys don't really have to overcomplicate stuff. It's pretty simple. You use data, build up your positions, structure your play, look at it from the grand scheme of things, and understand where the liquidity play is. Here the liquidity play was pretty much taking out the overzealous bulls. All right, this right over here was the, you know, spring, if you look at Wyckoff distribution. So let me show you a very good trick that I usually use. Sometimes you have to like sort of do vice versa. So if we invert scale, right, if we look at it from this perspective, right, this clearly is the spring. Okay, if we look at it from this perspective, this could be the accumulation. If you look at this particular chart, right? Boom, there you have it, spring. But this is only the inverse of what we were having. So instead of accumulation, it's distribution. Pretty much the same thing. Okay, so if you guys knew about this structure, then you would have been sort of doing your thing, and you would have, you know, shorted the market and probably made a whole lot of money. So now that we are in this particular situation, right, we just have to like play the range, identify the range, and, you know, get to multiply our money. So just like I told you yesterday, I was building my position, and I'm going to be now selling when we come to the top of the range and we have like a swing failure pattern above that particular price threshold. So yes, I am in profit. I did get to buy a few alternative cryptocurrencies, and pretty much if you bought any other cryptocurrency or the prominent cryptocurrencies, you would have been in money. Anything that really is directly correlated to the price of Bitcoin. For example, Ethereum, Binance, Algorand, AVAX, Zilliqa, Bake, and any other cryptocurrency which is decent. You should be in profit right now. But if you ended up shorting, right? If you ended up shorting, let's say you shorted the market here. You shorted the market at, what price point is this? 35,500. You must be, almost getting stopped out right now. But if you bought the dip, you should be doing Gucci. You should be all right. And the price is going to end up dumping. So look at it from that perspective. I really hope that you guys weren't shaken out, because I noticed people were kind of pissed off at me here because they were like, why is this guy saying it's bullish? Why is this guy not getting out, and why is he excited? Well, now you know the answer. All right, so yeah, it's been good talking to you guys. I hope you got a thing or two. So reciprocate this on different coins, markets, and basically you end up making money. So yeah, talk to you a little bit later. Subscribe to my YouTube channel. Drop me a comment in the comment section below as far as comments or rather questions are concerned. In terms of market psychology, I want to hear intelligent questions. I don't want to hear questions like when is it going to continue going to $1? When is Zilliqa going to go to $2? When is the bull market? Don't talk about predictions. Talk about market structure and liquidity plays. Like, please ask smart questions, not the generic when $1, when $10, when $3,000. That shows you're totally clueless. Because if you've got data points and you understand what the market is doing, you don't even need to ask for price predictions. Okay, there's no need for me to give a price prediction of Bitcoin going to 150,000 when we still have this structure to get to sort of complete. It doesn't really make any sense, and it could go either ways. This could be like a redistribution phase. It could be a redistribution phase, or it could be an accumulation phase where we end up thing. So I can't give you an overall super long-term price prediction because a lot of factors are going to be playing their roles, if you know what I mean. So yeah, that's all I had. Talk to you a little bit later. Bye.